Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad. And once again, it's a green screen. But in the last 1 hour or so, we have seen that Nifty has cooled off from its day's high levels. And right now, it has been trading flat with a positive bias. But yes, if you look at the levels as of now, Nifty is up by about 21 points, slipped below that 25,900 mark as of now. Sensex too has cooled off and it is showcasing a gain of about 61 points around that 84,500 odd levels. But it is also off nearly about 300 points from its day's high levels as well. Of course, we can see that the markets have cooled off from its day's high levels, given that there is some uncertainty regarding the Bihar elections outcome, which is due tomorrow itself. We did see in the exit polls that there is a clear edge which was given to NDA, but of course the markets have been pricing in and discounting in some of the uncertainty ahead of the results as well. But yes, let's take a quick sectoral check of where we stand. Nifty Metals once again aiding the gains with about 0.5% gains coming in from the Nifty Metal Pack, given that we did see a good set of results that came in from Tata Steel, and that's what helped revive the sentiment in the metal pack as well. On the other hand, if you look at the Nifty Pharma Index, that is also holding well in the green with about 0.5% gains coming in from there as well. Bank Nifty, however, that has cooled off from its record high levels. We did see that the Bank Nifty had hit about an all-time high levels, but right now it's showcasing a gain of about 0.2%. On the other hand, if you take a look at the other indices, PSU banks have cooled off. They are taking a reverse course and seeing a decline of about 0.5% cut from their reserve as well. Nifty Auto Index also exhibiting some weakness. Nifty IT Index also showcasing some weakness in today's market. But yes, let's take a quick look at where we stand in terms of the Nifty top gainers and movers. Then you can see Asian Paints standing tall on the back of its second quarter results. Well, it was a beat second quarter performance, and brokerages have also given a thumbs up to the counter, and that is why you can see that the Asian Paints has surged by about 4% in today's trading session. And in fact, the entire this month, we have seen that the paints major has surged by about 15% itself. But yes, coming to the next, that is your Hindalco. Like I was talking about, that the metal stocks and the entire metal basket has been quite buoyant, and you can see Hindalco also exhibiting a gains of about 2% as of now. Interglobe Aviation showcasing a gain of about 2%, up for the second straight day. ICICI Bank, L&T, some of the other gainers on the Nifty 50. However, on the way down, we can see Eternal showcasing a decline of about 3%. ONGC not doing well with about 1% loss. Adani Ports has also cooled off with a percent decline. M&M and Bharat Electronics, some of the other losers on the Nifty 50. But yes, to understand the last minutes of the trade and how you should be positioned, I'll go across to Kunal Rambia, fund manager of the streets, to understand where you should be positioned in the market like this. Kunal, good afternoon. Once again, it was a decent day for the markets, despite where we started off flat. But right now, some uncertainty which is trickling in the markets. So what can be next in terms of levels for the Nifty we can watch out for?
Good afternoon. Thanks for having me on the show, and good afternoon to all our viewers. So if you look at the Nifty, see, certainly we are heading for some uncertain event for tomorrow. So in the last 5 days, the profit which was seen in the Nifty, which was to the extent of around 700 points, I think that's some kind of profit booking is seen as of now in the market. But overall, if you look at the trend, it's absolutely intact. In fact, yesterday's low is still not broken. So from the short term point of view, the trend is positive. Mid-term trend is also positive. Long term, we need to be a bit cautious only because Nifty has reached the previous highs, which we saw on 29th October. But buy on dip can be good strategy, and certainly holding on to the long will definitely make sense.
Okay. Kunal, let's talk about Bank Nifty index also, because it's reached an all-time high levels, but it has cooled off from those levels. How would you view this? And of course, talk to us about IT sector also, because it was up for the third consecutive day, but today we can see a little bit of a reversal from there as well.
See, Bank Nifty is consolidating near its high, and the resistance what we are seeing on the chart is 58,500. I think that's the same zone which we are witnessing since 23rd October, since it made an all-time high. Though today we saw a new high, but 58,500 is still not decisively broken out. So this is temporary resistance consolidation. Again, the view on the indices are the same across these segments. Buy on dip can be good strategy. On Bank Nifty, we have a support which is at 57,900. Consider that one can definitely initiate longs if we get any decline on the same. As far as IT sector is concerned, I'm extremely bullish. The stocks are available at its 20 years and 25 years support trend lines. And the best pick out of that is the one which I'm going to share with all our viewers, and that's Tech Mahindra. We are extremely bullish. Pick up any IT counter in this roller coaster ride. This sector is clearly outstanding, and I think the strength is likely to continue even going forward.
Okay, strength is likely to continue from the IT pack. But apart from Tech Mahindra, anything else that you're watching out for, Kunal?
See, we actually shortlisted two counters. The first is Tata's TCS. Tata Consultancy, we initiated the first breakout buy, which was day before yesterday, at 3,060. Now the counter is trading at 3,110. I think this counter is clearly showing complete bottom out signs. With the stop loss as 3,000, one can definitely buy this counter from positional point of view. And the second is Tech Mahindra, which is again trading at 1450. The first breakout was at around 1400. With the stop of 1380, one can go long on Techem also. These two counters are not just showing strength, but they are offering good risk reward ratio. So from the long term point of view, it's a clear thumbs up.
Okay, all right. All right, let's move on and talk about the Nifty metal pack because that has been holding well in this flat markets. Kunal, coming to you, how much of an upside can we see from this metal index?
Metal index per se is certainly is in uptrend, but again, at this elevated level, the risk reward ratio is not really favorable. So the trend might just continue from here on. The index, which is trading at 10,500, we might see the levels of 11,500 to 12,000 also. But again, one needs to keep in mind the risk reward ratio, especially when we are heading for some uncertain event tomorrow, right? So by any chance, if we see any decline on the index, and if we see the levels of around 10,250 to 10,200 kind of levels, I think that can be the level to watch out for to initiate the longs. The best counter among the entire sector, which we like and we also have the position, is Tata Steel. Again, the only reason being sideways consolidating since last 15 days, offering good risk reward ratio. If someone wants to go long, even at the present level, with the stop of 170, one can go long. Targets can be 190. And if someone is an option trader, I think short straddle with long futures can be a good strategy here.
Okay, all right. Let's also discuss about one of the index and sector that is not doing well in today's trading session. That is your Nifty FMCG. It continues to cool off. By right now, it's exhibiting a loss of about 0.5% decline itself. And in the past 1 month, also the index has been fairly range bound. Kunal, anything that we need to watch from this space?
To be very honest, Lovisha, this entire sector has not done anything since November 2024. It's been almost a year. And look at the performance on the support level. We have an index support at 54,300 and the resistance is placed somewhere near to 58,400. It's sideways consolidating and now it's reaching near the low. So further decline of say at least 500 points more, and it's good shopping for at least 3 to 4% upside. And the best pick out of this can be Dabur, where we have a lot of comfort based on the formations. Dabur, which is presently trading at around 521, I think near 500 can be a good entry with the target of 540. I think these range bounds are offering good comfort for traders as well as for positional buyers, but don't buy at the elevated levels. Wait for some kind of correction to accumulate these counters for long term.
Okay, all right. Right, let's discuss about some of the individual movers then also. We'll first discuss about one of the top Nifty gainers today, that is your Asian Paints. Well, the stock has already gained about 10% in the past 2 sessions after it reported a strong set of September quarter results. We've seen brokerages also giving out a thumbs up to its second quarter performance. For instance, we had Jeffries, which raised its target price to about 3,300 rupees per share, and it noted that the domestic volume growth and the market share gains were some of the key highlights that came out from its September quarter. HSBC also raised its target price to about 3,050 rupees per share. So yes, a clear thumbs up for Asian Paints, given that it reported better than what the street was anticipating. Kunal, this month itself, the Asian Paints has seen about 15% gains. Past 1 month also has been quite stellar. But is it a good time to enter or hold on and book profits?
So now, Loisha, when we start looking at the positional charts, it's always funny to see the gain which is seen by the market, but the pain which the counter has gone through is actually ignored. This counter was completely a laggard for the entire year, from November 24 till November 2025. This counter wasn't able to cross 2560 mark. There was a zone where someone could have accumulated this. Now this counter has come out of that consolidation and we are seeing the levels of 2,900 coming on screen. Again, the IT sector, which is at the bottom, is in the similar formation. Now, when it comes to Asian Paints, Yes, if someone is holding, continue holding it because the overall trend for the past 10 to 15 years is absolutely intact. But if someone wants to buy now, I would not really advise. I'll wait for the counter to consolidate or enter into some kind of profit booking zone. If the counter comes near 2700, I think that can be good level to think of initiating buy for long term. For traders, it's fine to buy today and even sell tomorrow. But from positional point of view, I think 2700 can be a good level to initiate longs.
Okay, all right. That's the view coming in for Asian Paints as well. But yes, like Kunal, you were talking about, how the company has and how the stock has struggled for the entire year, and now we have seen some momentum pick up in the counter. But we'll discuss about the next stock in focus because that has been, the traction for the entire year. That is your Vedanta, and today also this stock hit a new high. We also saw some steady numbers that came out from the September quarter as well. And today also Vedanta has exhibited some bit of a good momentum in today's trading session, nearly up 2% gains coming in for the counter. Kunal, any levels you want to underline here?
So right now, this counter is on that breakout zone. That breakout is at 525. Counter is trading at 529. Good volumes are seen, and this broader consolidation of more than a year has now come to an end. This counter can surprise on the upside anytime soon. So with the stop of 510, now I'm giving a little far away stop because of volatility should not be triggering us out from the position. So with the stop of 510, one can definitely think of going long on Vedanta. Targets can be as high as 575 to 580 for now. And then we keep trailing the stop loss for long to hold this position. So it's a clear thumbs up, and one should definitely look at this fresh breakout from long term point of view also.
Okay, all right. That's the view coming in for Asian Paints as well. Now let's discuss about another stock in focus. Sorry, Vedanta as well. Let's discuss about another stock in focus. That is your Hindustan Aeronautics. The stock was sideways today after it did report an operationally weak performance. EBITDA declined by about 5% and margins also narrowed by nearly 400 basis points as well. But brokerages, they continue to maintain their ratings on the counter, given that they see stronger growth visibility in the upcoming quarters as well. Kunal, for you, Hindustan Aeronautics, how does it look like on the technical charts?
Absolutely sideways again. October till from 12th September, in fact, till now, this counter has not decisively broken 4700. In fact, today we saw a dip below 4700, but again, it was a recovery. So yeah, it's a buy at this level with the stop loss of 4600. Now, again, the stop loss is a little far away considering the volatility which we expect in the market. And the targets can be 4920. That's the nearest target. And the next target can be 5100.
All right, next target can be 5,100 for the counter. Let's take another stock in focus. That is your Page Industries. The counter has not been doing well on the back of its second quarter performance. We did see that the net profit has remained flat on a year-on-year basis. Revenue, however, has increased very modestly in low single digits to about 3% on a year-on-year basis. EBITDA has remained flat while margins have narrowed by about 100 basis points on a year-on-year basis. Page Industries, what's your outlook, Kunal? Because today the stock has not reacted well, and fairly the stock has been exhibiting some negative trend.
Absolutely, and this particular stock is clearly in the downturn itself. There's no sign of support anywhere except if we look at March 25 low. In March 25, this counter was at around 38,400 levels. It has reached almost the same level. We don't know whether it will hold that level, so we'll have to wait and watch for this counter to consolidate near 38,500 levels. If it consolidates, then we will think of initiating a buy. Otherwise, it's a clear avoid for now.
Okay, it's a clear avoid for now, right? Let's take another stock in focus. One stock that did well today, that is your Honasa Consumer. The company did report a net profit of about 39 crore rupees compared to a net loss during the same quarter last year. Revenue for the quarter has also increased by about 16.5% on a year-on-year basis. Kunal, good gains today, but the stock has fairly been range bound around that 250 to 270 odd levels.
Absolutely. And in fact, at this level also, it's not showing any, improvement in terms of price action also, and the momentum is also missing. So I would literally, it's a clear avoid for now. If the counter manages to close about 310, I think, I'll advise our viewers to come back to Moneycontrol and revisit the stock at that point in time with whomsoever is available. But as of now, it's a clear avoid.
Okay, as of now, it's a clear avoid, but right now the stock has been showing some traction, 2% gains coming on your screen for Honasa Consumer as well. All right, let's discuss about another stock in focus, that is your Granules India. The stock did rise today on the back of its second quarter performance. We did see that the net profit has risen by about 35% on a year-on-year basis. Revenue grew about by 34%. EBITDA has also increased, and if you look at the margins, that has also improved to about 21.4%. Granules India, Kunal, what's your counter? Today the stock is showcasing a gain of about 2%.
See, on the weekly chart, we can still see some kind of, the trend being positive. But on the daily chart, actually counter lost its momentum that and the support was broken, which was 555. From there, it came down to as low as 530. It has reclaimed that lost ground, but we don't know whether it will continue from here on. So again, it's a wait and watch for now. If the counter manages to hold this 555 mark for next 2 to 3 days, then with the stop of 530, one can definitely try to ride the rally. But for now, again, I'll turn a little cautious on this.
Okay, all right. Little cautious on Granules India then. Let's take another stock in focus. That is your Samvardhana Motherson. The stock has seen a good breakout today after its good set of numbers that came in from its September quarter. If you look at the net profit, that is 6% below its previous year's bottom line figure. But EBITDA has grown by about 7% on a year-on-year basis. Margins, on the other hand, has narrowed by about 10 basis points. But yes, margin has also expanded on a year-on-year basis. Kunal, what's your view on the counter? Right now, the stock has been exhibiting good traction. It's seen a good breakout of about 4% at this point of time.
So this counter, again, I'll talk a little bit about history. So September 24, this counter was at around 140. And from there, it came down to as low as 77 during March 25 correction. After that, the first breakout on this chart was at around 92. And that was in the month of May 25. Since then, this counter is consistently making a clear higher top, higher bottom formation on the weekly charts too. And daily is now offering good opportunity to buy. So if someone has not initiated a buy, I think this is a counter to hold on for long term. With the stop of 97, one can definitely initiate a buy at 110, and the positional targets can be as high as 135 to 140. So it's a thumbs up on this.
Okay, all right. That's the view coming in for Samvardhana Motherson. Let's take another stock in focus, that is your BKG Foods. The stock has been down today, but analysts have largely maintained their optimistic outlook on the counter following the announcement of its September quarter results. Now, the bullish views that has stemmed from the company's steady margin expansion in the second quarter and hopes that the growth would sustain throughout the second half of the fiscal year. But yes, coming to you, Kunal, past 1 month, the stock has seen a decline. But can we expect the trend to remain negative despite a good set of numbers that came in?
See, honestly, there is no momentum. Even if you look at the historical data from March till now, the counter is just in sideways. Though there were days in between where we saw the spike till around 800, it's back to 700. So it's a consolidating sideways counter and without any momentum. It's a clear avoid. Unless and until this counter makes a higher top, higher bottom, one should not even think of catching the falling knife. So let's stay out of it. By any chance, if the counter declines till 650, I would revisit. But at the levels of 707, it's a clear avoid.
Okay, it's a clear avoid for now, all right. Let's take another stock in focus then. That's your Info Edge. The stock has been under pressure on the back of its second quarter results. We did see that the standalone billings for the September quarter has grown by about 12% on a year-on-year basis, and billings in the recruitment business has grown by about 11%. But when it comes to the non-recruitment portfolio, that has also recorded a growth of about 16% on a year-on-year basis. Now, brokerages have been mixed on the counter. JM Financial has given out an ad rating, a target price of about 1450 rupees per share, whereas Nuvama has given out a buy call on the counter. Kunal, the stock, however, that has been oscillating in a lower range. So can we expect this trend to continue?
Yeah, so this oscillation is right between 1300 to 1420. So if the counter reaches near 1300, it's a buy. If it reaches near 1420, so we won't wait for 1420, near 1400 is an exit. This is the fifth trade which we are gonna take up now in-house also. So unless the counter comes out of consolidation, by any chance, if it breaks below 1300, it's an exit. If it gives a breakout of 1420, reinitiate a buy. But otherwise, one can definitely trade this range of 1300 to 1400.
Okay, all right. 1300 to 1400 range is likely to be there. All right, let's take another stock in focus. That is your Sky Gold. Well, the stock did gain 4% after the earnings, but it has fallen by about 8% from its higher levels as well. But coming to where the numbers stand, the net profit has risen by about 81% on a year-on-year basis. Revenue has nearly doubled. Operating performance has also showcased some strength, with EBITDA rising to about 100 crore rupees per share, 100 crore rupees, and margins have also expanded to about 7% on a year-on-year basis. Kunal, how does the counter look like for you today? However, the stock is seeing a downtick of about 2% as of now.
Almost it's been a year this counter is in sideways consolidation, and the mid range, or I would say median, is around 350, and right now it's trading at is around 347, so almost at the same level itself. So it's an avoid for now. If someone is a long term investor and is already holding the position, continue holding it, but the fresh entry on this can be only on the breakout, and that breakout is at around 375. So about 375 or near to say around 300 levels. But for now, it's an avoid. If someone is holding, continue holding it. But fresh entry should be avoided.
Okay, fresh entry should be avoided for Sky Gold. All right, let's take another stock in focus. That is your Cochin Shipyard. The stock has seen a decline today, and there's a sharp contraction in the margins, and which is why we did see that the company, that the stock is seeing a bit of a decline. Bottom line has also seen quite a fall. You can see profit has fallen by about 43% on a year-on-year basis. Revenue has slipped by about 2%. EBITDA has dropped by about 63%, and operating margins have also contracted quite sharply. Now, the shares have also fallen to its lowest level since September 12. Kunal, can we expect this underperformance to continue for Cochin Shipyard?
See, overall trend has been sideways, and as of now, the counter has taken the bounce right from the support level itself. And these support levels were seen somewhere in the month of these lows were seen somewhere in the month of May 2025, followed by August and September 2025. And that level is around 1620. In fact, today's low itself was around 1645. So, considering today's low as a good support, one can certainly initiate a buy tomorrow if there is a follow through buying. I think the risk reward ratio is favorable. In this sideways consolidation, if we get an opportunity to buy near support, it's a clear buy with the target of around 2000 levels. Again, that's a short term view. If the counter manages to close about 2000, we'll probably raise our target to 2300. But for now, it's a buy with the stop loss of 1640.
Okay, all right, 1640 for this counter. Let's take another stock in focus. One of the top Nifty gainers, that is your Interglobe Aviation. It's up for the second consecutive day, and in just the past 1 month, the stock has seen some good momentum. And from the November lows, also the stock has seen some traction with about 6% gains. Kunal, how does the counter look like for you for Interglobe Aviation?
It's almost at the breakout level after 6 months of consolidation, and that breakout is 5960. Almost there. Today's high was, in fact, giving us that hint during the market hours to buy, but we just patiently waited for the close, and closing is near to that level itself. So above 5960, it's a clear buy with the stop loss of 5860. That's 100 point stop loss, and the first target can be its previous high, which is 6250. Above that, keep trailing the stop loss. I think after broader consolidation of 6 months, this counter is now showing some good momentum. So this momentum might just continue for long term. So buy on the breakout and keep trailing the stop loss can be good strategy.
Okay, buy on a breakout for Interglobe Aviation. That's the suggestion. All right, let's since we discussed about one of the top Nifty gainers, let's also address one of the top Nifty losers. That is your Eternal. The stock has cooled off from its October peak levels. 14% downtick coming in for the counter. And today also we can see Eternal has showcased a loss of about nearly 4% as of now. Kunal, what's your view on the counter for Eternal?
See, in fact, this counter was clearly in uptrend even on the result session, on the result day, which was on 16th October. This counter made the high, but our view was bullish. And we held on to the position with the stop loss of 324, which is already triggered. And that trigger came specifically on 31st October itself. So post that, it's entering the downtrend. And I would advise all our viewers, if someone is holding it, if you have an exit strategy, please take an exit with the answer, when will you reinitiate a buy? So let's take an example that if you're taking an exit right now, the re-entry can be about 310. So that can be a good strategy on it. But the trend is clearly negative. I would avoid this counter until I see a clear higher top, higher bottom formation.
Okay, all right. Right, let's take another stock in focus. That is your Senco Gold. The stock is exhibiting some gains, 1% gains coming in for the counter. However, the jewelry retailer reported a muted revenue growth, with sales rising very modestly by about 2% on a year-on-year basis. But profitability is where the company showed a sharp improvement on a low base, and operationally too, EBITDA jumped by about 100% on a year-on-year basis, and margins nearly doubled too. Kunal, how do you view the counter? Of course, the stock has been in a lower range-bound territory, but today it's showing some bit of attraction, 1% gains.
Lovish, honestly, I'm not able to find out this counter. I think there seems to be some error. So we can probably move on to the next counter. Meanwhile, if at all I get a counter, I'll just share my view on it.
Okay, all right. Let's shift focus
Thanks
and
all.
talk about M&M. The stock has been seeing a decline of about 1.5%. But of course, one of the top Nifty loses as well, Kunal. But we can see that after 3 days of good momentum that the entire auto pack has seen, we're seeing a bit of a cool off. But from a levels front, how does M&M look like to you?
Absolutely trending counter, and there is no trouble since June. In fact, look at the levels of June and July. The counter was trading somewhere near to 2,800, and now it's trading at 3,700. It's a clear higher top, higher bottom formation. So if this counter comes down to, say, for example, 3,500 or 3,525, I think that can be a good level to reinitiate buy and keep holding such counters. The counters which are in absolute trend, one should not really panic and keep trailing the stop loss. Right now, the trailing stop loss on this chart is at around 3,500 levels. So keep that level in mind and strategize your entry. By any chance, if you get further correction, that can be a good buying opportunity. But if the stop loss is triggered, we'll take an exit no matter what. Let's ride this entire rally. I think this counter can go up to as high as 4,000 levels too.
Okay, all right. That's the view coming in for M&M as well. Let's move on and talk about another stock in focus. That is your Lincoln Pharma. The shares have slipped after second quarter profit has dropped by about 24% on a year-on-year basis, and margins have also come under pressure. If you look at the profit, that's fallen about 24% on a year-on-year basis. Revenues have marginally risen by about 1.4%. EBITDA has declined, and margins have also narrowed in the second quarter. Kunal, Lincoln Pharma, any views on the counter?
No, again, this is the counter which we don't really track. But on the contrary, I do have a view on the counter where we also have the position, and the counter is showing a breakout, the fresh breakout today, and that's Sun Pharma. This counter has, sharply risen from the support level of 1575, and today it's giving the breakout of 1740. Right now it's trading at 1742, and good volumes are also seen. So, this is the position which we are about to create if there is a follow-up buying tomorrow. So with the stop of around 1675, it's a buy, and the targets can be as high as 1900. It's a trending counter, and it's a clear buy on.
Okay, all right. Clear buy on for Sun Pharma then. Let's discuss about another Nifty 50 gainer. That is your ICICI Bank. The stock has been exhibiting some good moves today, but it's largely been range bound around that 1380 to 1345 odd levels. Kunal, ICICI Bank, is the consolidation and sideways momentum set to continue?
Yeah, I think overall the trend is still negative on the daily chart. I'm not denying the fact that the overall trend on the weekly chart is positive, but daily trend has still not really turned positive. So we are still witnessing the series of lower top, lower bottoms. By any chance, if the counter consolidates near the present level and we see the follow-up buying above 1420, I think that's where the first breakout can be. And these levels are far away from the present levels because the extreme volatility is seen on the counter. But yeah, buy on dip can be good strategy. The positional stop on this is 1250. Keeping that in mind, one can definitely add on declines. Now I'm sharing those levels which are on the weekly chart, right? So one need to be literally long term with the mindset to initiate a buy on ICICI. We are holding it as of now. Our trailing stop loss is 1270 for now.
Okay, all right. All right, just last rates coming on your screen where we have closed flat but slipped below that 25,900 mark as of now. Sensex is also opened. Sensex also closed with about with a flat but with a positive bias as of now. Bank Nifty cooled off from its record high levels, but still with about 100 points gain. And if you look at Nifty Midcap Index, also closed with about 0.3% decline as of now, despite hitting record high levels. Kunal, coming to you for the Nifty Midcap Index, of course, we did see a all-time high level today, but it has closed with about 0.4% decline. Anything that you're liking from this space, and how does the trend look like for the upcoming sessions?
The trend is certainly positive, Loisha, and I don't foresee any trouble if we see a series of sequential declines for next 3 to 4 days and with a massive cut. But otherwise, it can clearly be labeled as buy on dip. As we discussed, I think IT sector is offering good risk reward ratio, so any mid cap IT counters can be a good buy. Similarly, pharma sector is showing good momentum and reversal from the support levels. I think that can also be watched out for, and the metal sector where anyway the trend is absolutely strong. So any correction which we must have witnessed today on the counters, those counters can be seen from the long-term point of view as well as from the mid-term point of view. So these are three sectors where we are personally focusing upon. But again, I would say wait for the clarity. As a trader, it's not important to keep trading every day. So our viewers, it's a very friendly message to all our viewers that if there is uncertainty in the market, stay out of it. And if there is a correction, look at the trend. If the trend is positive, it's a clear buy. On mid-cap index, we are bullish. And if the index comes near 13,500, we will be a buyer with the stop loss of 13,000 levels. That's the view on the mid-cap index right now.
Okay, all right. Let's address one particular stock which did see a drop following its second quarter results. That's your Eicher Motors. I know we did discuss about M&M earlier today, Kunal. But for Eicher Motors, how does the chart look like? I mean, it did witness a late minute drop.
Again, sideways consolidating counter since September. The support is placed at around 6,700 and the resistance is at around 7,000 levels. So it's consolidating between that narrow range itself. But the support is far away. So by any chance, if we see further correction, I think 6,400 can be the good level to watch out for. It's not a sell recommendation at all, but 6,400 can be the zone to watch out for going long because these are trending counters, and I think that can be a good support near 6,400. So as of now, stay away. But if counter comes near 6,400, it's a buy.
Okay, all right. All right, let's take about another stock in focus, that is your Welspun Living. The stock did end in the lower territory today, given that the US tariffs have bit to its second quarter earnings performance, and that is why we did see that there was a 93% on a year-on-year basis net profit drop as well. On the other hand, the company also did see however, the company also did see on the revenue basis also, the company has seen a decline. Textile business revenue was down by about 14%. Flooring segment revenue was down by about 27% on a year-on-year basis. But yes, Welspun Living, how does the counter look like? 3% drop we have seen for the counter.
See, on Wellspun Living's positional chart, it's been a year of sideways consolidation with negative bias. August 2024 counter was near to 200, and since then it's clearly making lower top, lower bottom, and it's right now trading at 135. By any chance, if someone is willing to think of initiating a buy, I think the levels to watch out will be around 115 to 120, not at these elevated levels. I would personally select this counter and shortlist this counter only above 155 being the previous high on the weekly chart, because till then this downtrend will not come to an end. So first shortlisting criteria on the chart for us is always looking at the trend. As of now, the trend is negative, so it's an avoid and buy on support, which is at around 115, or if the counter gives a breakout, which is at around 155. So keep these two levels in mind and place your bet accordingly on this.
All right, just one last question before we let you go, Kunal. What are the top picks at this hour? Anything that you want to underline here?
So the first is Tech Mahindra, which we already discussed, right? This counter is looking very good to me. Good momentum, good strength, and good volumes are seen. So with the stop loss of 1380, positionally one can go long. And the midterm targets can be 1600, and above that it can show us the levels of 1700. The second is Kaveri Seeds. I think this counter, after slipping below 1000 levels, has reclaimed its levels really well. Yesterday it was up in session by around 5.5%. Today it was up by around 3%. So it's showing that resilience of not going below 1000. So with the stop loss of 1000, one can definitely buy Kaveri Seeds, and the positional targets can be 1150 to 1200 levels. These two are the positional bets which we have shortlisted to initiate the buy.
Okay, all right. Those are the two counters we need to watch out for. But with that, we have to let you go, Kunal. But thank you so much for your time and joining us.
Always my pleasure, ma'am. Thank you so much.
All right, let's take a quick check of the markets of where we stand. Of course, so we did end quite flat today, And you can see Nifty, however, it's still advanced to the fourth consecutive day, but we have slipped below that 25,900 mark as of now. Sensex is also closed flat in the green, but yes, it's a very flat and a quiet close for the markets from both the fronts. If you look at the broader end of the market, small caps have closed with about 0.3% decline. If you look at the midcap index, have also closed with about 0.2% decline as of now, despite hitting a record high level. On the other hand, from a sectoral perspective, you can see metal index has led the charge with about 0.4% gain. On the other hand, if you look at the Nifty Pharma index, has also done well. Realty stocks have done well. But what did not do well in this market was your auto and IT stocks. Despite surging for the third consecutive day, today we are seeing that both of these indices have snapped their 3-day gains and ended in the negative territory. On the other hand, some weakness was also visible from the FMCG counters, and you can see PSU banks also taking a reverse course in this market. But yes, coming to the top gainers and losers on the Nifty 50 or where we stand, Asian Paints closed with about 4% gains on the back of its second quarter results. Some upbeat results which led to brokerages also giving a green signal for the counter as well. Hindalco also closed with about 2% gains. ICICI Bank also did well with about 2% gains also. Interglobe Aviation with about 2% gains up for the second consecutive day as well. Lent also did well with about a percent gain on the other hand. Power Grid and Bajaj Finserv, some of the other gainers on the Nifty 50. On the other hand, on the flip side, if you look at some of the top losers, Eternal seeing a cut of about 2.5%, M&M seeing a decline of about 1.5%, Bharat Electronics and Trend, some of the other losers on the Nifty 50. But yes, to understand how the market looks like for the medium term and long term and how you should build your portfolios, joining me is market expert Sunil Subramaniam. Sunil sir, good afternoon. I mean, to start off with, we did close off in a flat trade, but we did have a record low inflation print before us, and now from earnings front also not too many downgrades. So, do you believe that it is just a picture perfect moment for the Indian markets?
Well, it's a picture perfect moment for the Indian economy, or not necessarily for the markets, because the two big arms which drive the market are DIS and FIIs. And DIS are wholeheartedly supporting, but the FIIs are not. So I would say it will be the pink when FIIs come back, and that's not necessarily linked to anything doubt about the Indian economy, but it's more linked to the international matters in terms of the trade deal and the tariffs. So I think that we would be much happier if the FIs change their mind about India.
So you said, what about President Donald Trump's comments that they could be nearing a trade deal with India, given that India has lowered its purchases of Russian oil. Do you believe that there's some progress coming in from there?
Well, this is like the story of the wolf which came, and it comes and it comes and comes. They say it's coming, but when is it going to come? So I think that I think it's time to stop. Mr. Trump, I think, used the occasion of Mr. Gore's approval by the Senate and the Congress to say some good words about India and say the trade deal is progressing. But we all know very well that there are red lines on agri, on dairy, on GM foods, on Russian oil. Though Mr. Trump claims that India has reduced Russian oil, that's more probably tactical, because oil is not a government decision; it's the refinery's decision, and naturally, based on the price and other things and the sanctions, they could have changed that. But that's okay. But the fact is that for the trade deal to get done, there needs to be traction on the by the trade talks itself. And Mr. Trump, I think, is more talking from a 10,000 feet view that Mr. Modi is his friend and India is a great country and we are going to do the deal. But when is the question? I think we need to see some more ground level concrete indicators from a trade level delegations rather than from Mr. Trump. So I think that we just have to wait and watch. But yes, he's not saying India is a dead economy. He has stopped saying bad things about India. So that's good.
Okay. So, sir, what about, you did mention about FIIs being on the sidelines, but do you believe that despite the earnings being very modestly, relatively better than the previous quarters, and the valuations have also gotten re-rated, but the ongoing AI trade play out is something that is going to be a hurdle for them to make a comeback?
No, see, actually speaking, the earnings was looking better compared to the very low expectations that we had. It's still in a kind of a single digit. I think midcaps probably there's a maybe 13-15% growth in earnings. But I don't see, I think large caps are in high single digits and small caps, if you see the number of companies, all caps has been disappointing. So I'm not sure that the earnings, right, especially, and this is not a good quarter to look at the earnings because the GST matters were all effective only from September 22nd. So the full play out of that, the festival season also, Diwali has happened in this quarter. So this earnings season was itself not a very eagerly awaited earnings season, if I may say, especially from FIS. The second aspect is that, see, if you're still seeing the GDP growth rates for India are still coming in around the 6.5 to 6.9, depending on various people. And that's something which has already been discounted. See, when you say valuations, we tend to look at PE ratios. But I think that what FIS tend to look at are, one is the PEG, which is the future growth rates of the Indian economy, and undoubtedly because of the tariff threat, the future growth rate of India going from its current 6.5-7% to an 8-10% level definitely has got hurt. So to that extent, to the fact that we're buying India on a PEG basis and not necessarily on a current PE basis, that's number one. Number two is the fact is that if you take the Warren Buffett indicator of market cap to GDP, that's something also they do. So from a market cap to GDP, our GDP growth, right, has been along expected lines, right, on 6.5-7, but inflation is lower. So actually nominal GDP has come down. The budgetary expectation was around 10%, close to 9.9%, but the latest quarter showed only 8.8 nominal GDP. So actually on the market cap to GDP ratio, the GDP hasn't been growing as fast as they expected it to. Right, and the market cap also hasn't corrected because DIs have been buying strongly and supporting the market from falling. So for an FII to think that India is cheap now, I don't think we are near that. India is still expensive, but they will still buy an expensive India provided the future growth justifies. And what the FIS will need to see, according to me, is some progress on the trade front, which would open up the US. Mind you, it's the single largest country, 30% of the world GDP is America, right? And so opening up of the US market to India is a crucial thing for India to achieve those big, another 2% GDP uptick from the 6.5-7 to an 8-10% is when I think an FIS will make a decisive comeback. Until then, these quarterly earnings are better. Yes, we have protected the downside from the tariff hurt. That's we have done a very good job. But that's not good enough to put in fresh money. And so I think to that extent, the trade deal is very important from an FI return perspective. I don't think because otherwise, if the DIs are not supported and the markets are corrected, then FIs will be looking to enter because we look at a value market. But no way that India has been a value market, will be a value market. We are always going to be a market where the growth rate has to justify the valuation. So that's the way. The only growth is the only solution for India.
Okay. But Sunil sir, from second half perspective, the street has been, has the street priced in the double-digit earnings growth that everyone has been estimating? And what's your projections from that front?
No, see, look at it this way. The street today, the DIS are left with no choice. The retail investors are giving them cash. Even this month, though it was about 20% lower than the previous month, the DIS have still got 25,000 crores in pure equities. And if you add arbitrage and, sorry, not arbitrage, you add the hybrids into it, it's about another 10,000 crores. So about 36,000 crores fresh cash has come in. So the DIS are in a situation where they have to buy something. So it's not that they are buying because they see a good growth story, right? Yes, they are not increasing the cash balance. The cash balance average for the industry of the mutual fund industry is about the 5 to 6% level, which is normal. But all the fresh cash coming in, they're going in and seeking. Now the GST cut and the consumption boom has obviously made a sector rotation in favor of consumption. But it's not that the double-digit earnings growth is what has made the DIs invest, right? The DIs have to invest, and India's story is good enough. Like you said, when you started the conversation about we being in a sweet spot, yes, economy-wise, we are in a sweet spot with a low inflation and with a decent GDP growth. So DIs have no reason not to invest in India. But it is not the earnings season. So if you see now, for the second half, they are obviously expecting a much higher growth rates because of the GST cut playing through in the second half of the year, right? That's very, very true. But again, like I said, I'm saying if the retail investors are giving money to the mutual fund managers, they have to go and buy. So the pricings of the support, buying support from the DIs will continue to remain. So our market, I would say, will still remain in a consolidation mode with a positive bias. right? Until the FIS decide to come back in a bigger way.
Okay, okay. So, sir, apart from earnings, we have the Bihar polls results tomorrow, and we did see some, volatility that came in the markets in the last hour or so. That the markets could be pricing in whether or not the NDA would have a clear edge in tomorrow results. But what are your estimates, and what kind of impact do you expect tomorrow we could have?
So I think that the market will immediately there will be a knee-jerk panic reaction either ways. It's a knife which will cut very sharply up or down depending on the NDA coming in because Bihar is in the Hindi heartland. It's an important state. I think next to UP is probably the largest state in India in terms of number of seats. So it is an important state, no doubt, and both sides have pulled out all stops in terms of things. And the key things which are coming through from the opinion polls are that there's an increase in the voter share in terms of number of people voting has gone up sharply. That's number one. The number of women voters has also significantly increased. Now, there's also a new party in the mix there, Jan Suraj. So, a lot of the opinion polls that I have been observing say that it depends on this party, how much of a party spoiler it's going to be. Because if it gets a very high share, that's probably going to hurt the NDA. If it gets a very low share, then it will benefit the NDA, is what the opinion polls are saying. So that's why the market is on a knife's edge. There will be an immediate reaction. But my suggestion is that whichever way happens tomorrow, if the NDA wins, the market will touch new highs. If the NDA doesn't get through, then the market could correct. But it's a knee-jerk panic reaction, and no medium-term investor should worry about what happens tomorrow because these are markets, short-term participants, margin traders, and those kind of equity traders who are punting on the result and doing that. It's not a place for the investor to be, and I would say, don't get worried about which way this cookie cuts tomorrow. That's okay. The market will absorb it in a few days. It'll come back to tracking earnings and inflation and RBI rate cut possibility, Fed rate.
All right. Some technical issues popped up. But yes, that was Sunil Subramaniam for us,
Can you
of
hear
course,
me?
taking us
No?
through how the markets have been and, of course, some uncertainty that came in for the markets. Yeah, Sunil sir,
Can
you
you
were
hear
you
me?
were saying something about the markets not going to pay heed too much of the elections and it's going to be in the usual course of manner.
No. I'm saying that the investor should not pay much heed. The market will pay heed tomorrow because there
Yeah.
are short-term participants, there are punters, there are margin traders who will try to bet on the outcomes and do. That's a normal part of the market's thing. There are speculators and there are investors. So I would say the market will react. I'm not saying the market will not react. Market will react strongly either way. But it's only a temporary phenomenon for a few days and it will get reset. So as an investor, you shouldn't worry about what's happening in the market tomorrow. That was my perspective.
Okay. All right, Sunil sir, with that, we have to let you go, but thank you for joining and connecting with us. Right, now let's go across to my colleague Yatin Mota, who is joining us from the Mumbai studios to understand how the individual movers look like. Yatin, good afternoon. Nifty up for the fourth consecutive day, but yes, of course, we did see some uncertainty when it came to the last hour of the trade, where Nifty was off nearly 100 points from its day's high, and of course, some uncertainty related to Bihar election results, which is trickling in the markets.
I think Bihar elections, obviously, one of the factors, and as Sunil Subramaniam was also mentioning, the markets in the short term probably would react to that number, the vote share, the seat share, how the coalition for NDA shapes up. But talking about the markets, as you mentioned correctly, that almost 100 points off day's high, almost a flat closing for Nifty as well as Sensex, mid and small cap indices also almost 0.3% lower. And Nifty Bank, after hitting record levels, settled almost 107 points higher. Advanced decline ratio slightly weaker by the end of the trading sessions, almost 2:3. But select result reactions are good. We had a continued rally in stocks like Asian Paints. We also had Hindalco, ICICI Bank bouncing back a trade. What was not doing well in the large cap was the likes of Eternal, M&M, ONGC, BEL. But all in all, a flat trade in the markets. Obviously, market will take cues from the Bihar election outcome as well as near term we are also looking at the trade deal conclusion with the United States. Probably the first phase is almost ready. Hopefully, there should be some announcements by both the governments in the short term.
Okay, all right. All right, I guess now let's quickly discuss about the individual movers of the day as well. Like Yatan, you were talking about Asian Paints also, one of the top Nifty gainers. Did extend the gains today on the back of its all-round second quarter performance as well. We did see that the paints major report double-digit growth in sales volume in its decorative segment for the first time in 7 quarters, and this growth came despite the extended monsoon rains, which was prevalent across most parts of the country, and that had dampened the demand for the paints as well. But yes, number-wise, decorative paint segment in India saw about 11% year-on-year increase in sales volume and 6% rise in value as well. Brokerages have given out a mixed verdict on the counter. If you look at Jefferies and HSBC, both of them have revised their price target to higher. Jefferies have raised their price target to about 3,300 rupees per share. And what they made them positive was the company's domestic volume growth with some market share gains as well. HSBC also raised its target price, saying that the recovery in its core retail decorative business may continue to go forward as well. And that's the reason why they have kept their FY27 EPS estimates above 10% above estimates as well. However, on the flip side, we had brokerages like Citi and Goldman Sachs that remain bearish on the counter, citing multiple challenges. For instance, Goldman Sachs, they appreciated the second quarter results, but they warned that the sustenance of such growth could be challenged in the near term as well. So, Yatin, mixed verdict on Asian Paints, but we did see Birla Opus CEO exit that also sparked interest in the counter.
Yes, and that is the reason why the stock is up almost 15% plus in the last 1 month. Since the results, obviously we have seen a 7-8% kind of a rally, including yesterday's move. But the bigger part is that will this volume growth trajectory continue, because Q1 was soft, Q2 we saw almost 11% volume growth in the domestic markets in the decorative segment, and probably if that continues, the momentum continues, probably market will try to re-rate. But ever since Birla Opus has announced its plans in the paint sector, the market was nervous, and this is the reason why even on a 3-year basis, the shares of Asian Paints are down almost 6%. So it has not been able to recover, the tops which it made 3 years back. Birla Opus's entry obviously was the factor post which the stock has seen steady derating. But as you mentioned, the brokerage views are still mixed, since they'll wait out for 1 or 2 quarters to really establish if Asian Paints really is the king.
All right. That's Asian Paints for you. Let's discuss about another stock in focus today. That is your Hindustan Aeronautics. The stock was flat today after the company reported a weak operational performance. And given that its top line and bottom line rose modestly in double digits, but we did see EBITDA declining by about 5% on a year-on-year basis. Margins also saw a contraction of nearly 400 basis points. Despite this, brokerages still maintained their ratings on the counter. Citi continued with its buy call, saying that while the second quarter performance was affected by some of the margin volatility, but it expects growth momentum to pick up in the upcoming quarters. Now, the brokerage has also stated that it remains confident given that Hindustan Aeronautics' strong sales visibility as well, and they expect revenue growth to accelerate given that the delays around Tejas aircraft deliveries would bottom out and manufacturing revenues would gather pace as well. Meanwhile, we had CLSA also maintaining an outperform call on the counter, and Nomura retained its buy call on the counter, projecting its EPS to grow at about 24% CAGR between FY25 to FY28 as well. But yet then weak operational performance, but brokerages that continue to remain confident of its growth visibility in the upcoming quarters.
Yeah. Clearly, I think the Tejas aircraft program itself is quite large, which supports future earning growth. Probably, if you look at HAL over quarters, the earnings would be volatile. But these are defense companies wherein the project life is quite large. One aircraft take time to get manufactured. So looking at it from quarter basis, I don't know if it makes sense. But brokerages are confident that the kind of order book the company is sitting on, especially with Tejas aircrafts and a few of these transportation helicopters, probably would drive the overall earnings for them. But talking about Tata Steel also, Lavisha, this is one counter which was slightly softer in trade. Obviously, the numbers were slightly above expectations on beat from the India operations. The UK operations, were quite weak. In fact, the pressure really continues in the European markets, given the fact that UK is not profitable. The management obviously expects some bit of recovery, but that could take a few quarters from here when it comes to the European operations. Meanwhile, brokerages like CLSA have a hold call on Tata Steel with a target of 170. We have Jefferies, which has a target of 200 on Tata Steel. But clearly at this point in time, it is also important to see if the government decision to impose additional duties on imports that works out or not, because government is yet to extend the additional duties on imported steel, especially from China and Vietnam. And if that were to come, probably that could be some relief for steel makers like Tata Steel.
That's right. That's Tata Steel for you. And today also the stock did well on the back of its second quarter performance. But yes, one stock that also did well, that is your Honasa Consumer. We did see that the company reported a net profit in the September quarter compared to a net loss during the same quarter last year. Revenue that increased by about 16.5% on a year-on-year basis. EBITDA too turned positive, while gross margins saw an expansion of about 200 basis points. The company has also increased its store reach by about 20% from last year, while distribution outlets have increased by about 35% on a year-on-year basis. But however, the brokerage's reaction, they were quite mixed. We had Jefferies that maintained a buy call on the counter, saying that the business is now poised for a strong growth in the upcoming quarters. And it said that the Mama growth is back on the growth trajectory, and its offline strategy has been delivering results, and that's what kept them bullish on the counter as well. But HSBC gave out a reduced rating on the counter, saying that the company is still a low double-digit grower, and they would be cautious on the counter in the upcoming quarters as well. So yeah, then mixed brokerage reaction, but today we can see Honasa Consumer saw some bit of a buying interest, but it still remains below its IPO price.
Yeah, below its IPO price. However, Jefferies believes that from here there could be a 50% upside. And this time, Q2 we had Mamaearth, their flagship brand, giving positive growth. So this is one takeaway. Hopefully, if they continue the momentum in second half, there could be some legs to the rally here.
Yeah, right. Right, that's all the stocks we have for today. But yes, stock specific action will be continuing tomorrow on the back of earnings reaction as well. And once again, we can see that the Nifty is up nearly 2% so far this week as well. But tomorrow we'll be getting the Bihar election results reaction. 8 a.m. is when the results will start trickling in, and we'll watch out the developments throughout the day as well. But yes, that is something that we'll be watching out for tomorrow on the final day of the trading session. But for now, we've come to an end of this edition of Closing Bell. But before I let you go, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Moneycontrol app and subscribe to Super Pro today itself.